Hey Sampham, this is Ria from SAMAYA, MCQ 101, CA final. Description of each key audit matter in the key audit matter section needs to cover except the following information. We'll go with SC 701 and see what's key audit matters first. What key audit matters were most significant as per auditor's professional judgment in the audit of financial statements. Key audit matters selected from the matters communicated with you TCWG. So that said, we'll figure out which is not required in this key audit matter section. Reference with related to disclosures in financial statements. Financial statements, yes, we have to give reference with that and explain those things. Explanation on matters given by management. All the matters that were communicated to TCWG has to be given in this key audit matter section, not the explanation given by management. So option B is something to cover. This might be the appropriate answer. And matters discussed in the audit, yes, all the matters discussed in the audit can be given. Why the matters are considered be more significant, as we have said, significant with auditor's professional judgment, right? So we have to give reasons for that. So option B is the most appropriate answer. Explanation on matter given by management need not give description on key audit matters paragraph. Hey Sampham, this is Ria from SAMAYA, MCQ 102, CA final. S Limited declared dividend of 10%, but it did not pay to 4 shareholders due to some legal dispute there. Now the auditor is asking about the penalty under section 127 of Companies Act. You see, whenever a company declares dividend, they are liable to pay, but they are not liable under section 127 of Companies Act if there was a legal dispute or the shareholder he himself asked to not to pay. When there were unpaid dues from the shareholders, he could adjust that. So as per option D, Executive Director Mr. Ram is not liable for punishment as there is no offense under 127 of the Act because there was a legal dispute held. So option D is the most appropriate answer. Hey Sampham, this is Ria from SAMAYA, MCQ 103 CA final. You see, your EQCR and the auditor of that hospital company or a company had not communicated with TCWG even though there were issues identified in the course of audit. What the auditor is thinking is that it is a management responsibility to communicate with such deficiencies to TCWG, and management also did not communicate. Neither of them, neither the auditor nor the management communicated to TCWG. And what is your opinion as an EQCR? It is the auditor responsibility for communicating to TCWG under SA 260. Also, management has a responsibility to communicate the matters to TCWG. Communication by auditor does not relieve management of its responsibility. Yes, the auditor has to communicate as per SA 260 as he has to do audit as per standards on auditing. And with that communication does not relieve management from its responsibility to communicate with TCWG. Option A seems to be most appropriate answer. Sampham, this is Ria from SAMAYA, MCQ 104 CA final. This question is with regards to Caro applicability, and K Limited is taking borrowing of overdraft 40 lakhs each from 3 banks, that is in total 120, and also had an unsecured overdraft of 36 lakhs. 120 plus 36 lakhs, 156 lakhs. And they have fully utilized A and C. For 2 banks, they have fully utilized the overdraft limit. That is, the loan amount is 80 lakhs plus 36 lakhs here. That is 116 lakhs, more than once a year. If the borrowings were more than once a year, CARO 2020 is applicable for that entity. So option D, the CARO 2020 is applicable to the company as the borrowings exceeds the prescribed limits. Option D is the most appropriate answer. Hey Sampham, this is Ria from SAMAYA, MCQ 105 CA final. A bank has given some non-interest bearing staff loan. That is a position and is an employer. It has given to its staff some advances which do not render any kind of income under the principal amount. In the balance sheet, these should be presented under term loans, cash credits, overdrafts, or loans repayable on demand, advances in India or others under other assets. It is option D, others under other assets. Hey Sampham, this is Ria from SAMAYA, MCQ 106 CA final. A. Dharma established another branch and he gave an article on the front page of local newspaper on the occasion of opening of that another branch. What kind of misconduct is that? Under which clause it would come? Clause 8, Part 1, second schedule? No. It is when the auditor fails to obtain sufficient and appropriate audit evidence. Whether it's a clause 5, Part 1, first schedule? No. When he secures services of another person who is other than an employee or his partner or not chartered accountant. So that's also not option B. And option C, clause 7, part 1, first schedule, where he advises his professional attainments other than the professional or legal documents or his visiting cards or signboards, etc. That is, as he advertised his professional attainments in newspaper, he would be a misconduct. He would be treated as guilty of misconduct under clause 7, part 1, first schedule. So option C is most appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 107 CA final. CA Ram identified a misstatement in last year in which they have been given unmodified opinion. That's a clean report. But now what the auditor Ram has to do? Whether he has to issue an unmodified opinion in the current year? No. He should see legal opinion? No. He should qualify the current period financial reporting audit report with corresponding figures. Yes, this is the most appropriate thing that CA Ram could do. Option C is the most appropriate answer. He should qualify the current period audit report with respect to corresponding figures only. Hey Samsung, this is Ria from Samaya, MCQ 108 CA final. For the year ending 31st March 2021, the entity had claimed a refund of 2 CR of custom duty. That duty was admitted by the authority on next year, next financial year, April 2021. What do they have to do? They have neither in the March 31st for the year ended, they have neither credited in P&L account and nor reported in Form 16 or Form 3CT. What do they have to do? Whether they have to do or not. You see, Clause 16, Form 36 has to be mentioned when the custom authority do not admit the refund amount or do not admit that dispute amount. And as that a refund was not credited in the financial year, they need not show that into the P&L account financial statements also. So we'll see the first option here. And they should report and they need not report. The refund of should be need not be reported in clause 16 as it is admitted by the customs authority in next financial year. So option B is the most appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 109 CA final. Here they have given few shareholdings and they asked us that there's a change in the shareholding. So what the adjustments were known as? These were where there was a change in shareholding, it's a permanent change for that consolidated adjustments, right? So they are not memorandum adjustments, current period consolidated adjustment, they are permanent consolidation adjustments. Option C is the most appropriate answer. Change in shareholding is a permanent consolidation adjustment. Hey Samsung, this is Ria from Samaya, MCQ 110 CA final. C. Kamal is statutory auditor of A Limited, where he noticed that 46 CR, that is 25% of total assets of inventories, do not exist, and the sales equal to 10% of total sales have not actually occurred. That's something of material misstatement. Both were material misstatement and they were pervasive also because the sales and the inventories would affect other accounting heads or other balances of the or even profit, all the things with regards to the financial statement. So it is material as with regards to the amount is high and pervasive as it affects other items also. Now what the Kamal has to do? What Kamal has to do when they are material and pervasive with regards to financial statements, what he has to do? He has to give a adverse opinion. So withdrawing the engagement is not the case. Issuing an adverse opinion, yes, he has to issue an adverse opinion. Option B is the most appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 111 CA final. The acceptable deduction risk needs to be what? High, low, low, high. Always risk should be low. So it would be either option A, C. In order to reduce audit risk also should be low. What that? High. Option A has very high level risk. No, that's not the option. So option C. The acceptable deduction risk needs to be low to reduce audit risk to an acceptably low level. Option C is the most appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 112 CA final. AB Associates has a chartered accountant firm who is appointed as an auditor for a company where one of its partner is relative to finance director of the company. What kind of threat is that? Self-interest threat? No. Self-interest threat is when the auditor has financial interest. Advocacy threats is when you admire somebody from the company, you advocate or you work on behalf of the company. Here it's nothing that. Familiarity threat is where you know someone in the management, because here this might be the correct option. Why? Because he's a partner of the firm is also a relative to the finance director of the company. So there's a familiarity threat here. Self-review threat is when internal auditor use or review the work of the statutory auditor. There's nothing else here. So option C is the most appropriate answer. This is Ria from Samaya. MCQ 113 CA final. Auditing is doing audit of trade receivables and found there were few differences with regards to balance confirmation and as per company sales ledger. They're asking whether which of the amount is AN AO was a timing difference. For AN, the invoice raised on 29th March 2021. Obviously, this is a timing difference. What we have to check is we have to check for the pre-year end invoices data, and for which payment was made on for AO. The payment was made on 30th March. For this, already the payment has done, so both the books would be appropriately have been affected. So that's not a timing difference there. And something that were disputed for AEP, that was not a timing difference, and there was no reply. There's not a timing difference. So for A and Co, it's a timing difference. What we'll see here. Option B, the difference in relation to A and Co represent a timing difference and should be agreed to a pre-year end invoice. Option B is the most appropriate answer. Hey Samfam, this is Ria from Samaya. MCQ 114 CA final. AJ Associates is acting as the auditor of XYZ Limited. Now, XYZ wanted to appoint that AZ Associates as its cost auditor also. Can a company auditor be appointed as a cost auditor? No, he cannot be appointed as a cost auditor. We have to check these four things. Practicing CA, CWA, CMA can be appointed as cost auditor? No. Practicing CMA or CWA only has to be appointed as a cost auditor. So option 2, only practicing CWA, CMA can be appointed as cost auditor. And company auditor can be appointed as cost auditor. No, company auditor cannot be appointed as a cost auditor. So option 2 and 4 were right. So the appropriate answer is option B. Samfam, this is Ria from Samaya, MCQ 115 CA final. The management intentionally made misstatements in financial statement to deceive users of financial statements. That is, the misstatement is material and pervasive also, because the intention is only to deceive the users of financial statements. So not a single account or single class of transaction have been misstated. Its whole financial statement have to be misstated. So what the auditor has to give, the auditor has to give an adverse opinion. We'll see with regards to that. Question is also with regards to that. The auditor should issue qualified opinion, no adverse opinion. Yes, he should give adverse opinion and include basis of qualified opinion. No, he has to include basis of adverse opinion. So option C is the most appropriate answer. Please Samsung, this is Ria from Samaya, MCQ 116 CA final. You see, what they were asking is that whether these expenses could be included under this head or not. You see, salaries of employees, yes, they could include in employees remuneration and welfare benefits account. Premium to employees health cover, yes, they could include in that remuneration account. Training and non-training expenses, you see, they can include training, but non-training expenses were general expenses, so they could not include that in employees remuneration account. So there is a flaw here. We'll see the options now. No reimbursement of premium health, there's no problem with health cover. No training expenses should have been shown separately. Yes, it should have been shown separately. And incentives paid to employees should be included in employees remuneration, etc. Yes, here the last one, incentives paid to employees should be given in employees remuneration and welfare benefits account, right? That's a welfare benefit for its employees. So option B is the most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 117 CA final. You see, they have segregated the population into monetary segments like this, systematic segment. And then they have taken 25% in one lowest group or 2% in whatever categories they have segregated. What kind of sampling is this? You see, it's not a section sampling, it's not selection sampling here. It has either systematic sampling or a stratified sampling. Stratified sampling where the group should be similar in nature, but it is systematic sampling when they have divided into regular intervals. You see, 250 here and there were 250 here, 250. They were at regular intervals. They were divided into groups at regular intervals. So it's a systematic sampling. Option A is most appropriate. When they were of similar nature, it could be given stratified sampling, but they were at a regular intervals. So systematic sampling is the most appropriate answer. Please confirm this is Ria from Samaya, MCQ 118 CA final. You see, the auditor is testing the accounts payable and he found that found three parties and where Mr. B amounts 14 lakh 56,000 out of 16 lakh 16,000, which is a very significant amount. What are all the alternative audit procedures to check transactions of Mr. B? Inspect each and every journal entry passed in books of NEMI? No. With regards to Mr. B, we have to check journal entries passed with regards to Mr. B. So we'll see that option here. Ask NEMI to provide details of payment during the year. Not all payments need to be checked. Inspect invoices issued by Mr. B and payments made. Yes, in order to inspect the balance of Mr. B, what we have to check? We have to check the invoices issued by Mr. B and payments made. Option C is the most appropriate answer. We need not check everything while we wanted to get evidence, sufficient and appropriate evidence only with regards to a particular account balance. Hey Samsung, this is Ria from Samaya MCQ 119 CA final. What are the factors that auditor has to consider while communicating significant deficiencies under SA 265? The nature, size, and complexity of the entity, yes. Nature of the significant deficiencies, yes. Estimated time required by management to resolve the deficiencies. No, he need not consider that. Even it's time cumbersome, the management has to implement the remedial actions. So fourth one is free charge from the client. No, he has to check 1 and 2. So option A is the most appropriate answer. He Sampham, this is Ria from Samaya MCQ 120 CA final. As per SA 550, which relationship among these create a presence of control or significant influence? Friend or family member, they have influence but not so much of control and significant influence. Debentures, no. Holding debentures, no. Debentures do not contain a very significant influence and control. The entities holding of equity in other entities. Yes, option D is most appropriate and answer. Why? Because it's holding equity. Please confirm this is Ria from Samaya, MCQ 121 CA final. You see, they have given a scenario where the software had got some incorrect changes. What kind of such incorrect software changes lead to? That incorrect software changes were loss of general IT control, so that is misuse of passwords or unauthorized access to the IT information or any kind of information in applications. So this is a loss of general IT control. Hey Samsung, this is Ria from Samaya MCQ 122 CA final. Here they are asking about the secretarial audit applicability. RST Limited is a listed company, listed entity, and it has net worth of 80 CR. You see, the applicability of secretarial audit is when it's a listed entity or when when it's a public company having paid up share capital 50 CR and above and a turnover of 250 CR or above, or having loans or borrowings 100 CR or above. And as per regulation 24A of LOD, or any kind of material subsidiaries of that company for which secretarial audit is applicable were also eligible for secretarial audit. Since RST being a listed entity, as they have given a hint of market capitalization here, secretarial audit is applicable for that. But it's when for the PQ Private Limited, it's a subsidiary. It's a material subsidiary because 25 CR divided by 80 CR, it's mostly like 30%, right? More than 20% is a material subsidiary. So when it's 30%, even for PQR also secretarial audit is applicable as it is a material subsidiary. So option A, both RST Limited and PQR Limited shall undertake secretarial audit. Hey Sampham, this is Ria from Samaya MCQ 123 CA final. If the prior period financial statements were not audited, the auditor shall state the same in key audit matter section, emphasis of matters paragraph, going concern paragraph, or other matter paragraph. It is option D. Most appropriate answer is option D, other matter paragraph. Hey Samvam, this is Ria from Samaya MCQ 124 CA final. In case of audits of listed entities, other information section is required in auditor's report when when the date of auditor's report, the auditor has obtained some or all other information, obtained all of the other information, obtained or expects to be obtained the other information, obtained some of the other information. You see, we have to discuss that why the word expects here has come, because at his auditor's best of his knowledge, he thinks that he had obtained all the other information. So this phrase is also very important with regards to giving an auditor opinion, because auditor gives a reasonable assurance. So option C, auditor has obtained or expects to obtain the other information, is the appropriate answer. Option C. Please Samfam, this is Ria from SAMAYA, MCQ 125 CA final. In case of audit of unlisted corporate entities, other information section is required in auditor's report when the date of auditor's report. The auditor's report has obtained, the auditor has obtained some or all the other information, obtained or expects to be obtained other information, some of the other information. You see, obtained or expects to be obtained other information is right option when it is listed entities. For unlisted, when the auditor has obtained some or all of other information. So option A is most appropriate answer.